You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Let's now move on to our Day 1 highlight, our keynote presentation with the Honorable Allison Herren Lee, Commissioner of the U.S. Securities and Exchange Commission, who will discuss priorities for the SEC and her current views of market issues. We thank her for being here today, and she'll be interviewed by OCC's Chief Executive Officer, John Davidson.
Well, good afternoon and good morning, depending on where you are joining from. I'm John P. Davidson, the CEO of the Options Clearing Corporation. I'm pleased to introduce you to our keynote speaker today, Commissioner Allison Lee. Commissioner Lee has practiced securities law in private, academic, and public sectors, most recently serving as commissioner at the SEC since 2019 and serving as the agency's acting chair earlier this year. Her experience in both domestic and international securities law and regulation has given her a unique set of perspectives and driven her leadership on a broad set of issues. Thank you so much, Commissioner, for being here. We truly appreciate your giving us some of your time today.
Thank you, John. It's a pleasure to join you.
Well, I have a few questions for you, and I hope we have time to get through all of them. The first is the fact that the past year has certainly been unprecedented for all of us. In this industry, we saw record volumes, which were processed smoothly by market infrastructures, despite nearly all of our teams being in a work-from-home environment. From your perspective at the SEC, what are some of the positives you observed, and what are some of the lessons learned for going forward?
Sure. There absolutely have been some positives, and as you indicate, we've certainly seen our share of challenges from a market standpoint and from an operational standpoint in this last year. There are some things that have changed during the pandemic, like we've had to adapt to working remotely. We saw shifts from floor trading to all electronic trading, including in the options exchanges, which, handled that really well. There were lots of, exchange rule filings to make those transitions as seamless as possible. We saw COVID-related issues cause unprecedented volume and volatility, and that really tested our financial system. We saw trading and message volume that tested our trading infrastructure. Volatility tested some firms' capital reserves. We saw market-wide circuit breakers that were triggered several times in response to rapid declines in the S&P 500. Lots of limit up, limit down halts, significant increase in those instances. But on the whole, I think the equity markets faced a significant test and really responded quite well, demonstrated integrity and resilience. The volatility control measures in particular worked as intended, I think, giving markets and the participants a chance to pause and catch up during these, severe declines. So overall, I think that message was a positive one. In terms of lessons learned, I think one thing that this past year has really affirmed for me is how global our markets are and how market issues implicate multiple jurisdictions, and recent events in particular have shown the importance of a dialogue and discussion with domestic and international regulators to share information and try to manage risks across jurisdictions. And I guess, obviously, one final lesson, I think we now know we can run our markets virtually, almost every component of them. It works, I think, much better than anyone would have ever expected. So I doubt we'll see a full return to business as usual after the pandemic. I think in many ways, our markets have been forever changed. But, overall, I think positive news for us.
Thank you very much. Now, Commissioner Lee, in your role as SEC's acting chair, you've been participating in the Financial Stability Oversight Council, or FSOC, meetings with your fellow financial regulators. What insights can you give our audience about the benefits of having that forum in place to coordinate on policy matters? And what do you find the top priorities for FSOC to be this year?
Sure. So, regulators are going to be examining, part of the agenda laid out by FSOC will be examining issues surrounding U.S. Treasury market structure, hedge funds, money market funds, and open-end mutual funds. All of those are similar work streams we have going at FSB, the Financial Stability Board, and also at IOSCO, the International Organization of Securities Commissions. But I think the work that we're doing domestically and internationally regarding fixed income markets is really critical. We need to study and think through what we can do to make those markets more resilient, to address risks that I think may have contributed to some risky debt financing practices. So I think, that's one area that FSOC is going to be looking at. And of course, assessing the risks that are posed to our financial system by climate change is a key priority for FSOC as well. And the SEC is actively engaged with the council and its members in that work. But, in all of this work, FSOC gives regulators a place to come together, assess our financial system as a whole, and ensure that there are not regulatory gaps on critical issues, and help facilitate a coordinated approach, because so many of these issues, as I mentioned earlier, cut across jurisdictional boundaries. So I personally have always been a big believer in FSOC's mandate, and I think between the pandemic and climate change, FSOC is more important than ever. So I'm very happy to see it getting new life.
Thank you very much. Speaking of coordination, as you briefly mentioned earlier, it's not just with your fellow domestic regulators with whom you're working, but also with international regulators. We here at the Options Clearing Corporation are very pleased that the SEC and the European Union were able to reach an agreement on equivalency, as it enables us to pursue European recognition as a central counterparty. We anticipate also a similar process in the United Kingdom. What is your perspective on international coordination and cooperation? Are you encouraged by the tenor of recent discussions in this regard, or do you think there's still a way to go?
So the answer is yes, I'm encouraged. At post Dodd-Frank, our work is focused really heavily on international coordination and cooperation settlement, including, CCPs like OCC or, central clearing parties. And so the efforts, I think, which have been ongoing for quite some time, are starting to bear fruit. And as you probably know, the Commission staff actively participated in drafting the principles for financial market infrastructure, and that serves as the basis for most CCP rules, including our own covered clearing agency rules. And then to complement the European Commission's recent equivalence determination, as you pointed out, I was very pleased to see the EC's decision to delay until June of 2022 heightened capital charges that would accrue to EU members from clearing at third-party country CCPs that aren't currently recognized by ESMA. I thought that was a positive step. And so we continue to look for ways to coordinate and cooperate with international colleagues, including, as you know, we participate in international working groups like the CPMI IOSCO group, the subcommittee CPMI, and then FSB on matters of mutual interest like CCP resolution guidance, for example. So I am encouraged. I think progress is being made, and I hope you think so as well.
Absolutely. We find it very positive moves in that regard. In your tenure as acting chair was not exactly a calm, uneventful period of time. Talk about some of your initiatives in a moment, but I'd like to ask you about the market activity that you've had to respond to during the time you were acting chair, particularly things like the trading activity related to GameStop, the policy and political reactions and discussion associated with those events. We've certainly seen some of your statements, and we know there's a report being developed by the agency. But there are a variety of possible responses, and I wonder what, in your opinion, are some of the most compelling issues raised by the GameStop and other sorts of so-called meme stock trading. Do you think it's the change in the equity settlement cycle to possibly T+1? Are there issues related to payment for order flow that are the most compelling? The so-called gamification of trading, particularly for retail investors, or the increased need for investor education that flows out of the events in the market?
Sure. You mentioned a lot of very important issues that have kind of been brought into profile by these events. And these kind of events can really serve to highlight and focus attention on market trends and potential updates that might be needed to market structure. So I view GameStop and the trading in the meme stocks as highlighting a number of issues, including, the increase in retail participation that we saw. And I'll just add that the commission emphasized in one of its statements on GameStop trading that it wanted to facilitate a robust public dialogue among market participants about these issues. And I've already heard from numerous folks on this, but I look forward to more, and as well as you point out, seeing the findings from our staff that are looking into these events and preparing a report. But I do think you've hit on, probably the most important issues that I think are highlighted by this, starting with T+1 or a shortened settlement cycle. Certainly these events brought that into focus. And there's been a lot of discussion of shortening the settlement cycle a second time. As you know, we went from T+3 to T+2 in 2017. And now we're looking at this again to consider further shortening the cycle. I know you probably know DTCC put out a white paper in February on this, and now, of course, your organization, along with SIFMA and ICI, at the time were instrumental in going from T+3 to T+2, and I appreciate the efforts being made by those organizations to facilitate kind of a further shortened settlement cycle. I think it's important that we look at all the issues, though, that are relevant to shortening the cycle. It's going to require industry input and coordination from like a wide variety of market participants to fully understand what the operational issues are, the system and the business changes that are going to be required. But having relatively recently moved from T+3 to T+2, I think we have a better starting place for these discussions and kind of what the implications are. And of course, shortening the settlement cycle would provide benefits by reducing risks in the market, lowering margin costs and creating capital and operational efficiency. So it is something I'm supportive of moving forward and looking into. I want to add too, I think, as we look at the settlement cycle, I personally think that it's also a good time to look at data identifiers that are used by investors and businesses and regulators. Data is fundamental for regulators being able to oversee the markets, as you know, and since changing the settlement cycle involves kind of examining the entire life cycle of trade execution and reporting, I think it gives us an opportunity to consider whether we ought to adapt regulations or adopt regulations and forms to incorporate alternative identifiers, like you're probably familiar with the legal entity identifier, the LEI, the unique product identifier, the UPI, and then the financial instrument global identifier, or FIGI. So these data identifiers offer open, freely available alternatives to proprietary identifiers. I think that's something we should look at, as we look at shortening the settlement cycle. Now, other issues implicated by GameStop that you mentioned, and I agree, are important for us to consider. Payment for order flow. We updated our rules for broker routing disclosures in 2018, and those enhanced requirements were implemented, I believe, last year in 2020. They require greater specificity concerning the types of practices that might present conflicts of interest. And the new disclosures provide important public information on retail order flow and the amounts of payment for order flow associated with different types of securities and different types of orders. But I think we need to take a closer look at customer order handling practices and broker conflicts of interest when execution venues are providing payments for routing orders to them. I think that's been brought into sharp focus. You mentioned gamification. Investors now have access to broker-dealer apps that makes investing more accessible and provides additional opportunities for investors. I think that's, been a positive development, but, this kind of trading also implicates investor protections. And as we saw, with the recent events, and issues like, is there adequate disclosure around conflicts of interest and the risks to investors inherent in this kind of trading? And then last, I think you mentioned the increased need for investor education, and I agree with that as well. One of the other aspects of retail trading is there's been a growth in options trading by retail investors. And you all know well how complex these products are to value and to price. And so I think we really need to make sure that broker-dealers practices when they're onboarding customers that are going to be trading in these products, that they have appropriate measures to ensure that retail investors have the requisite level of knowledge and expertise for options trading before enabling retail investors to trade. I think we need to take a look at that. These are good products. They serve a very important purpose, but we need to make sure that the folks that are using them understand them. So those are some. They're really, the list is quite long for issues that I think are implicated, but I do think you hit on the most important ones there.
Well, thank you very much for that. I'm afraid I've been in this industry long enough to remember both T+5 and what the UK called fortnightly settlement. And we've certainly come a long way in that regard. The options industry, as our audience knows, has been settling on a T+1 basis since it established in 1973. So it is possible, but there's a great deal of work and coordination to be done to get there.
Yep.
Another of the issues that GameStop and related matters highlighted were some questions about market structure. That seems to be nearly a constant topic of conversation in our industry, and of course, it's always tricky to adjust and understand the potential for unanticipated consequences. Do you think there's some obvious issues that the Commission should take up this year in the market structure space? And if so, what do you think those are?
Sure. So you're absolutely right. It's tricky to adjust. And so these are complex because our markets are complex. But I think it's important for us to look at the recent trading events and ask ourselves, are there market structure changes that are needed in light of today's modern trading environment? I mean, I personally would like to better understand the life cycle of a retail order. I'd like to know, the quality of execution that retail investors are getting. I'd like to know how price discovery is impacted by having so much order flow being executed off exchange, which, as you know, that's where most of the retail orders are executed. And then, as I mentioned earlier, is there adequate disclosure of the costs of trading to investors? So I think the Commission will continue to look at the impacts of payment for order flow and whether, reporting requirements need to be updated, like Rule 605 and 606, which address reporting of order execution quality and then order routing practices. And then lastly, I'll say, and I've said this now for over a year, I'm very sympathetic with the view that the Commission could do more to provide guidance to brokers and market participants on what best execution requires in particular contexts. I think the Commission has emphasized over the years that compliance with Best Ex needs to evolve with changes in the market. And I think participants could use some better insight from us on that. So a number of continuing issues, I think, to look at in the market infrastructure space.
Great. Well, thank you. We look forward to learning more about those initiatives. Now, an issue that you're personally quite interested in relates to so-called environmental, social, and governance, or ESG matters. You've certainly been a leader in this space and rolled out some detailed priorities for the SEC in this area. In a speech you gave last month, for example, you described this issue by saying, quote, "That's why climate and ESG are front and center for the SEC. We understand these issues are key to investors and therefore key to our core mission. And just as we recognize that these issues do not observe artificial distinctions between society and financial markets, we recognize that climate and ESG transcend other boundaries as well. Geographical boundaries, for one, these are global challenges for global markets that demand global solutions. Regulatory boundaries, for another. Climate, for instance, is not just the Environmental Protection Agency, Treasury, or an SEC issue. It's a challenge for our entire financial system and economy." Close quote. To your point, we've seen a commitment across the administration to focusing on these issues, up to and including President Biden, who we may hear from tonight on these issues as well as others. What are you most excited about in terms of the ability to move forward with initiatives in this space, particularly in your role at the Securities and Exchange Commission?
Sure. There's a lot to be excited about in this space right now. And as you may know, this is something that I've been focused on now for many, many years, long before I was even sworn in as a commissioner in 2019. But what I'm most excited about now is to see the strong commitment to address climate change that's going across the entire government, including in the financial regulatory space. I mean, we saw the announcement from Treasury last week. They're going to create this climate hub to coordinate all the efforts. We heard remarks from Secretary Yellen committing to an urgent kind of whole of government approach to climate change. I've tried to do what we've called here a whole of SEC approach to climate change. We've seen the FSOC prioritize climate change as part of its agenda. So it is very heartening to me to see the urgent attention that's coming to this issue across the regulatory landscape, because it is an urgent problem. And it demands our immediate attention. So, at the SEC, we're committed now to doing our part. It's as I said, it's long been a priority for me, and as acting chair, I did work to advance as much as I could during my 3-month tenure. And for example, I tasked our Division of Corporation Finance with enhancing its review of sort of current climate-related disclosures. I opened up a comment file on potential rulemaking in the space. We've got now an enforcement task force put together to make sure that with respect to existing rules and existing disclosures. Those are being made appropriately. We're looking at whether we should update our guidance. There's just a number of kind of across the board initiatives that we're pursuing. And I very much look forward to our new chair, Chair Gensler's continuing leadership on these issues. It really does cut across all regulatory and jurisdictional boundaries. And so I'm very pleased to see this broad commitment to addressing it. And I think it's important to note, the SEC is not the first agency you think of when you think about climate change, but we have a key role to play because of disclosure. I mean, that is our kind of bread and butter at the SEC, and disclosure is not the extent of our role as it relates to climate and ESG, but it's very fundamentally important to get the data out there. Not only does the information in these public company disclosures inform investors and the markets, but it informs other regulatory efforts. So, we need good data to form the foundation for policymaking efforts going forward, and that's where we come in. So I really anticipate that enhancing climate-related disclosures to get to this sort of, consistent, comparable, reliable data that we need will continue to be central to our efforts going forward. And yes, I'm profoundly encouraged by the shift.
And of course, public companies are not the only ones that impact and are impacted by climate. Do you see disclosure we typically think about with respect to equity securities? Do you see room for that with respect to the issuance and disclosure around fixed income securities as well?
So you make a really good point, which is, and this is something that I've thought about quite a bit, and we put some questions about this into our request for comment, and the notion that getting this information from public companies will not give us a full picture of the markets, and so we are going to have to think about what does that mean? What does that mean in terms of the kind of the gaps in investors' information, in regulators' information about about the climate risk and opportunities that are out there for non-public companies. Certainly, the fixed income markets is one way to look at and think about that. There are a number of other, I think, potential approaches, but you're absolutely right to note that. And I will say that I've long understood that that's one of the biggest challenges I think we face, among many, in getting to the right place on disclosures connected to climate change risk. So we'll see, and I welcome comment on that. If you go and you look at the release that we put out, it's been a couple of months ago now, or maybe just a month. You'll see some questions on that, and would love to get as many folks' ideas and thinking on that as possible.
Great. Well, thank you. And you mentioned Chair Gensler. Have you had an opportunity to discuss some of these ESG concerns with him? I know it's pretty early days in his tenure in the chair.
Sure. So I've talked to him about all manner of issues that are relevant and front and center at the SEC. And as I said, I'm just very optimistic and encouraged about his leadership. So I've gotten to know him, relatively well over the past few months, and I think he's gonna be a tremendous leader for the commission. So I'm really looking forward to that.
Well, great. Thank you very much, Commissioner Lee. We really appreciate your spending some time with the options industry today. Please also convey our deep appreciation to everyone at the Securities and Exchange Commission for their dedication to well-regulated securities markets, something that has set the United States apart since 1934. So we thank you again for your time and look forward to interacting with you more in your tenure at the Commission.
Same. Thank you very much, John. Appreciate you having me, and thank you.
Thanks for taking the time.
Thank you, John and Commissioner Lee. This was a wonderful conversation with you, even though we only had you through audio, Commissioner. We appreciate your time.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.